Welcome to the Maqro Minutes for this week, 31st of March. We're at month end, quarter end, end of Japanese financial year as well, if that means anything to anyone. Formalities out of the way first. So the information in this webinar is, the advice is general in nature, doesn't take into account your specific circumstances and should not be acted upon without the full understanding of your current situation and future financial goals. Right, now stocks in our universe. Over the last week we have HLO, Hello World, AGL and WROR Worleys. So we're going to start off with Hello World today. So pretty much their principal activities, they're a travel company, international and domestic travel products and services, and they have an operation with a retail distribution network of travel agents. So the HLO's operations are primarily focused across the Trans-Tasman Transport Link, Australia and New Zealand, and offer services across four key pillars: retail, corporate, wholesale and inbound travel. So during COVID, they had successful cost-cutting initiatives and a restructure, which allowed them to remain operational. And they're basically looking at emerging with a profitable forecast by the first half of next year. Their liquidity risk is mitigated with a very strong cash position, so fairly stable. We got strategic acquisitions have been made in the last sort of 6 months. And these partnerships will boost their competitive advantage over peers and establish barriers to entry as well. So obviously this has been a bit of a hot topic with the Queensland, Greater Brisbane lockdown in the last week. But look, in the medium term, the pent-up demand for travel remains extremely strong. Forward bookings globally are at the highest levels pretty much we've seen. We're looking at a robust recovery over the next 2 to 3 years as the vaccines are fully distributed. And look, on Tuesday we've got New Zealand Prime Minister Jacinda Ardern is looking to announce a travel bubble arrangement, which will see resumption in air and cruise travel across the Tasman particularly, which is good for these guys. That will sort of open the door to potentially a Singapore bubble as well. They're only taking people who are vaccinated at the moment, so that's probably the next one. And the government's already in initial talks with Singapore about that. So look, the demand for travel services and for retail and corporate will more than likely soar as basically the vaccines roll out and the clusters diminish and the infection rate diminishes. But it will remain critical to this sector. So we'll basically wait to see. Okay, next up we've got AGL. So yesterday, AGL announced some demerger plans to create two leading energy businesses, the new AGL and Primeco. The intention of this is basically to give each business the freedom to operate and execute from their own perspective. And address specific business market forces. It also adds a bit of transparency and valuation as well. The new AGL would be the country's largest multi-product energy retailers in terms of services offered, and will be carbon neutral for direct emissions from day one, with a clear path to carbon neutrality. In contrast, Primeco would hold large coal power plants and would be the largest emitter of greenhouse gases in the country. However, going forward, they're still committed to moving away from coal power energy, with plans to be fully net zero by 2050, which is a very long-term goal, but so be it. It's been described by some analysts as a bad magic trick. Essentially, there's net, they're basically the same company. However, look, restructurings like this in response to a declining share price are usually fairly positive in the medium to long term for companies. So it shows that management are at least taking some initiative, and we basically expect it hopefully will stem the bleeding in the AGL share price. They did have a couple of announcements about some projects they've got going on. The Crib Point project, which is a LNG import jetty. they've committed total about $130 million to so far. They're reviewing and reconsidering their position in relation to this because the Victorian Planning Minister's determination is that the project will have unacceptable environmental effects. So we'll have to wait for a further update on that one. Another project was the Portland smelter contract, which accounts for 10% of Victoria's total energy demand. That one got renewed, so that's some positive news there for AGL. Next up, we've got Worley's, WOR. So a bit of movement there in restructuring. TSA Management snapped up Worley's public infrastructure advisory business, Capital Projects Advisory, for about $50 million or thereabouts. Sales pretty consistent with their strategy to just continue focusing on energy, chemicals and resource customers. So the news of that CPA sale helped buoy the ASX 200 energy sector well into positive territory, even despite a wide oil price pullback. As basically the oil price pullback as they cleared the Suez Canal. The container ship was stuck there for about 7 days. And I think it accounted for about 12% of global trade in energy. So most of that being LNG, 8%. I think it was only a couple of percent for oil, but that's all fixed up now, and it's business as usual. So they've got a sustainable hydrogen energy project. They've appointed a front-end engineer and designer for their hydrogen utility, $240 million electrolysis plant, and ammonia production facility. So that project is going ahead. Now, we've also got another service contract awarded from SABIC in the plastic and recycling and circular economy area. So this Plastic Energy Advanced Recycling is a unit in the Netherlands. Basically what it does is it transforms plastic waste into recycled oils, and then they can actually be used as like an alternative feedstock back into the manufacture of plastics again. So now, stocks to watch out for over the next week. We're looking at Webjet, AP Eagers and IPL this week. We'll start off with Webjet. Pretty similar story to HLO, although there's some differences from a business point of view. Webjet being a big brother to HLO. Look, as part of its strategy to refine technology and processes across its business, Webjet has announced it will be integrating with a blockchain-based online travel marketplace called locktrip.com. They've secured rights to about 51% stake in the company, which 25% has already been acquired for about $4 million. So Locktrip essentially provides a private blockchain called Hydrocoin, and it solves many issues across their commercial operations. It sort of helps Webjet deliver cost reduction initiatives by mitigating intercompany reconciliation costs and issues, labour costs and hard costs of disputed bookings. So that's it's a fairly good thing from a risk management point of view from their part, and also it makes incredible efficiencies in terms of getting paid on time and lessening disputes. So Webjet recently did a investor presentation in Sydney based on their WebBeds business. So WebBeds is currently like the second largest global B2B provider. Represents about 4% of global market share. There is significant room for growth in this part of their business. They're currently working on cost reduction, and they should get about 20% more cost efficiency at scale if initiatives to become like the number one B2B provider, with planned expansion to North America, where it only captures 1% of the market. So that's relative to, say, they've got 4% in Europe, 3% in Asia Pacific region. So they're targeting $10 billion in total transaction value, which represents 14.2% market share of the current market. Same again, as I said before, their share price has dropped off a little bit, particularly in the last week, from about 580 down to, I think it got to the low 540s on the back of the Queensland Greater Brisbane cluster of COVID. We had, I think, six new cases or 8 new cases yesterday. There was only 2 today, so it seems to be contained at this point. There were concerns because it is of the more highly contagious strain. However, we will have an announcement from the Queensland Government at 10 o'clock Sydney time tomorrow as to whether the lockdown will be extended. It's currently at 3 days. Look, Webjet's fundamentals remain very strong. They have a big network advantage over their peers, and the focus on becoming a digital B2B provider and their light capital business model make it a great recovery play. It's been wrecked before by the in the trading department. So look, we exited last Friday on the COVID fears. We've already gotten back into Hello World. We set downside re-entry at about 207. The low was about 206.5 there. They're up about 3% today, the travel stocks, on the back of the only being 2 new cases. But with a long weekend coming up, 4-day weekend, which is the longest period that the market is closed over the year, we're probably looking to re-enter Webjet from the trading department's point of view around about Tuesday morning, which coincides with that New Zealand bubble. Just probably a little bit too much risk on the table there at the moment, but from an investment point of view, the fundamentals are very strong, and we should have some very strong long-term growth. Rightio, APE is the next one. Look, it's going ex-dividend tomorrow. It'll be paid on the 20th of April. It'll pay 25 cents per share, which is about 35% of earnings. Low yield at 1.6 on the current share price, but more than half of its earnings are reinvested back into the business. So we'll continue to see APE's earnings per share grow. On average, in the last 5 years, it's been about 8.4% a year. So they've had a little bit of an issue. They're a motor vehicle reseller. There's a semiconductor shortage globally, particularly with the microcontroller unit chips used in cars. On the 22nd of March, it was a fire at Renesas Electronics chip plant. It's going to cause a short-term shortage in supply, as Renesas has 30% of market share in the global market for that particular chip. It saw automakers like Toyota, Nissan, Honda, and Japanese car makers close down at least 3.5% plus. So how it played out was that Toyota obviously has an arrangement where they have to stockpile these chips, whereas the other automakers didn't. And Toyota really is the market. So that will mean it's not quite as severe for Australia. This impact will trickle back into sort of new car sales, which has been growing pretty significantly, 11.3% in January and 5.1% in Feb. But we won't see as bad of an effect as, say, some other motor vehicle markets. Rightio, IPL, Incitec Pivot, is an Australian manufacturer of fertilisers and explosives chemicals. So it's the largest supplier of fertilisers in Australia and the largest supplier of explosives in the US and Canada. Internationally, the business sort of sells fertilisers to other major offshore agricultural markets in the Asia Pacific, India, Brazil and the United States. Fertiliser business accounts for about 40% of total revenue. So obviously in Australia, particularly with the recent rainfall along the east coast, that's heavily improved agricultural conditions, with the flooding really confined to coastal regions, which are not major production regions for agriculture, although they do have some. So this is a bit of a perfect storm in terms of China tightening the world supply by prioritising their domestic consumption, the winter freeze in the US reducing capacity, rising gas prices, rising agricultural prices. All these factors will basically keep the fertiliser prices elevated. They might probably, I would say, until the end of this year, and then potentially maybe fall into the start of next year. But overall, fairly positive for that. That sector's been going fairly well over the last sort of couple of weeks as well. I think GrainCorp and Wesfarmers have been doing okay. So, Rightio. Now looking ahead to the next week for major economic releases. So we've got OPEC coming up in the next couple of days. Oil prices have been pretty volatile, very up and down, but not necessarily going anywhere, but having fairly wide ranges on the day. OPEC will set their oil production targets. It's looking like with the oil price having a bit of a bid tone that they're likely to cut production, but OPEC has got a fairly decent habit of surprising the market. So 2nd of April, we've got ISM manufacturing numbers out of the US. That will more than likely be a little bit overshadowed by the fact that we've got that we'll have US employment numbers, non-farm payrolls on Friday. This might be a bit of a risky one, the non-farm payrolls. The only market really globally that's going to be open will be the Chicago Board of Trade, the bonds. It's going to be a half day generally, and I dare say volumes will be quite thin. We do have global bond yields at 17-month highs at the moment, so this really has been affecting tech stocks. It's making those growth sort of stocks a little bit weaker, and people are a little bit more hesitant to buy those. That coupled with a thin market might cause some volatility there, I would expect. And look, we're getting up towards, I think they've risen about, bond yields have risen about probably 10, maybe 15 basis points in the last week. It's kind of gone under the radar a little bit, but we are edging towards that 2% mark, where a lot of big fund managers will start switching out of growth stocks into value. So we'll probably see a little bit of reshuffling there if yields start to go up. They are expecting quite a bumper number, up 1 million there. We'll probably get a little bit of a lead out of the weekly ADP non-farm numbers on Thursday night. It's expected at 550. We'll have to wait and see with that, but everything really with the vaccination rollout going at absolute breakneck speeds in the US, we could see quite a significant number, even on the high side of 1 million, which is fairly significant. So, and finally, obviously next Tuesday, as per usual, we'll have RBA. When cash rate's going nowhere for at least a year, we'll look for comments out of there about QE in Australia. They've stepped up their bond buying program over the last couple of weeks, and sort of receiving some fairly stiff opposition from bond markets. So we'll probably see some sort of comment out of the Reserve Bank there to try and push the market back into whack to where they want it to be. And that pretty much wraps it up. Thank you for listening or attending the Maqro Minutes. I hope everyone has a great Easter weekend, and we will chat next week.